I've got to ask you the number one question on the lips of a lot of people on Wall Street at the moment. Is this a negotiation or the new rules of the game? How would you frame things for people this morning?
Good morning, and thanks for having me. How I'd frame things is that it could be either. I think the president is famous for his negotiating skills. The president is renowned for pulling deals out of a hat when nobody thought it was even possible. I'd remind everyone that the Phase 1 China deal in 2019 was a fantastic deal for the United States that the president created. It covered intellectual property, it covered market access, it covered purchases of agricultural commodities, it covered currency manipulation, it covered all sorts of things, and it was a fantastic deal. And unfortunately, the Biden administration walked away from it and refused to enforce it, and that was a big loss for America. So the president is famous for being able to create deals when nobody thinks he can, and so that's what it can turn into if other countries come and offer the right things that persuade the president.
Well, let's talk about the right things. So as far as we know, Vietnam came to the table and offered to drop their tariffs to zero. That was rejected. The EU offered to drop tariffs on industrial goods. That's been rejected. What would be the right kind of offer? Are they aware of what the right kind of offer would be?
Right. So I think that a narrow focus on tariff rates is insufficient, because the truth is that the non-tariff barriers pose enormous barriers to trade balancing over the long run. Countries have to open their markets to U.S. exports, and I don't know exactly what combination of details they have to make in an offer. But all I can say is that negotiating is better than not negotiating.
Stephen, the difficulty that people are having at the moment, and you're aware of this, I'm sure, is that they're unclear whether it's about barriers to entry or just the deficit, because they are two different things. Which one is it?
Of course, they're two different things, but they're deeply related and inextricably related. If you reduce your barriers to entry, you open your market to U.S. exports. Of course, the trade deficit will respond to that. I think that there's no question about that.
When you talked about yesterday, I know you gave a speech, you talked about this way of burden sharing and some other measures partners could take to potentially get to a deal. Things like even writing checks to the Treasury. How exactly would that work?
Well, I think there's a variety of ways that could work. For one thing, they could just, sort of simply say, hey, America is providing us with, with a defense umbrella, which creates prosperity, which creates peace, which allows us to prosper economically. They could say, hey, America is creating a global trading system backed by this defense umbrella, which again allows us to trade, which creates our prosperity, and we're going to help share the cost of those things. We're going to send some money to the United States to help it provide those things. I think that would be a fruitful outcome. But of course, it depends on what the president decides. The president will negotiate the deals that he thinks are best for America, best for Americans, and I can't get ahead of him on those issues.
You also talked about how partners can invest in and install factories in America, or trading partners. Could China do that?
I think they could, but it remains to be seen whether they'd be willing to. I think China's policy has been to try and sort of steal all the manufacturing market share for themselves, not only from the United States but for many of our trading partners as well. And it seems to me unlikely that China would be willing to make that concession up front. However, I would welcome it.
So China said yesterday they will withdraw. Trump said yesterday, that if China does not withdraw the retaliatory tariffs, the U.S. will impose an additional 50%, less than 24 hours, starting tomorrow. Do you expect those additional 50% tariffs to come into play?
I think that depends on the Chinese. And, my advice to them would be that they have a lot more to lose than America does, that America holds the leverage, and everybody knows that, and therefore they should seek a détente, and they should offer concessions which would persuade the president to relent.
Uncertainty might be a good negotiating tactic, but it's really bad for business. That's been the message from a lot of corporate executives, and what you're seeing certainly in markets. Are you worried that U.S. companies are going to stop investing, and that could stymie some of the progress that you're hoping to engineer?
Yeah, so the president has been very clear that what he's engaging in is a long-term improvement in the economic welfare of the United States, and a long-term improvement in putting American workers on fairer ground vis-a-vis the rest of the world. Some temporary uncertainty will come along with the transition and with the imposition of those policies. That's without a question. However, I think it's important to understand that uncertainty doesn't really cause recessions. I don't think that there's been a recession that was caused by people wondering, what's going to happen tomorrow. Uncertainty can delay decisions. for sure, as you're saying, there could be some transfer of investment decisions, some transfer of hiring decisions from one month to another. That's absolutely possible. But there's limits to that, because eventually a firm is going to decide, hey, I really need to add this capacity, or hey, I really need to make a decision about what's going on. And at some point, waiting becomes not worth it. So is there a chance that the uncertainty causes, sort of distortions in the month-to-month or quarter-to-quarter macroeconomic data that make one quarter look weaker and another quarter look stronger? Absolutely. That's likely, right? If it's not only possible, it's quite likely. But companies can't delay decisions forever. Eventually, they got to pull the trigger and they got to invest based on their evaluation of the most likely policy landscape in the future. And the president has been very clear about what that policy landscape looks like. In fairness,
though, a lot of people, in particular Wall Street economists, have come out and said actually uncertainty can cause a recession. And we have heard that from a number of different Wall Street firms, from a number of different companies. And frankly, the Small Business Consumer Survey came out this morning and saw the steepest plunge that we've seen going back years. There is a question here about, yes, they have to ultimately make decisions, but when do they start laying people off? At what point are you worried about execution risk at a time where some of the structural changes take a lot longer than some of these policies are taking to implement?
Yeah, well, look, there isn't really any material sign of layoffs in the macroeconomic data, so that's not something that I'm seeing right now at all. And what I would say is, again, to remind people that there are three legs to the stool. One is trade renegotiation. The other two are deregulation and tax reform. And those are still in the pipeline. We're waiting on Congress to extend the president's historic tax cuts from 2017, which will sort of preserve low marginal rates in American workers and firms. But on top of that, what we experienced in Liberation Day was a roughly 13 percentage point rise in the effective tariff rate on all imports, and that's going to create enormous amounts of revenue, hundreds of billions of dollars of revenue that can be used to provide additional tax relief for Americans. And the president has been pretty clear laying out certain forms of the tax relief, and I think that there's scope to go even further than that. I personally would like to. However, it depends on what Congress works out and negotiates with the president on that. I don't always get, I'm not the president, right? The president is the one who will decide in collaboration with Congress. But I think that using that revenue for additional tax relief would be a fantastic outcome. I think that deregulation is underway, and that the combination of making America more competitive via tariffs with making it easier to build and invest and hire here is a fantastic outcome. And when you look ahead to the future, there's going to be an America that's the best place in the world to do business, because the tariffs make it competitive, deregulation makes it easy, and tax reform makes it efficient. And tax reform keeps more money in people's pockets, makes it easier to hire, easier to invest, and those are all great things. And the markets will look forward to that. Markets should be forward-looking. Yeah.
You're talking about the entire policy proposal. Markets are forward-looking. They're already pricing in just that, the extension of TCJA. What more can be done on the tax side? Do you think we will get no tax on tip, no tax on Social Security?
Yeah, I think we'll see that. And I can't get ahead of Congress. I can't get ahead of the president. But the president's been clear in calling for those things, and I'm optimistic that we'll get them. And I'm also optimistic that we'll get some form of further tax relief beyond that. What form that takes, will be up to Congress and the president. But I think that it would be a fantastic outcome for American workers if we took money raised by tariffs levied from foreigners and used that to lower taxes on Americans. That would create a more efficient, dynamic, competitive economy that would transition into the president's new golden age.
Stephen, how can it be both? How can it be both a source of revenue to provide tax relief and an option for negotiations?
Well, tariffs raise revenue, and then
I've got
from
that
that
piece
revenue...
of it. Yeah, sure. But you said you can negotiate this.
Oh, because the negotiation. Okay, so yes, so I understand what you're saying. So presumably, if the negotiations lead to materially better trade terms for American firms, then you create a booming economy because there's much more demand for our exports.
And then we take the tax relief back?
Well, then you don't have this additional revenue to pay for that tax relief. But nevertheless, Congress and the president are determined to extend the original tax cuts and provide the additional relief that the president has spoken about.
Okay.
So it's a question of how much further beyond that can you go.